All right, go. So, let me pull this. Is my screen not sharing yet? Still blocked, huh? All right, let me do it again. How about now? All right, good. Okay, so I think we've got a couple exercises to do today. And then we'll talk about one. Don't let me forget, I have an extra credit opportunity for you guys. And this is a really, really easy one, so you want to take advantage of it. And number two, we'll talk about next week. So, did I send number 18 to you guys that we should go through? Okay. Was 21 the only one that I had assigned for today? Anybody else? Is that the only one if that's the case, um, tell me if that's not the case, and then we'll go back. I thought I had something else. Amanda, do you have something to tell me? Okay, okay. We'll go over them then. So let's go back to number 18. Let's look at 18 here quick so that we can say we did it. Um, According to the author, it says it should only take us 5 minutes if you see that. So start the clock. The balance sheet for this partnership is as follows. And it says Delphine, Xavier, and Oliver share profits and losses in the ratio of 4-4-2, respectively. The partners have agreed to terminate the business and estimate that $12,000 in liquidation expenses will be incurred. What is the amount of cash that safely can be paid to the partners prior to liquidation of non-cash assets? So in letter A, and this is a nice layout if you look at the screen. Well, what we start off with was with cash, right? You must have your liabilities taken care of first before you think about any kind of payments. And then they also gave us a $12,000 liquidation expense. So safely, um, because there is only 40,000 of liabilities and 12,000 of expenses, we're looking at 8 grand. Okay, the 8 grand. That's just a safe cash. But then letter B, it says how should the safe cash of safe cash be determined and paid to these partners? So who gets it? It's 8,000 we know, but who's going to get it? So if you lay it out 60, 40, 20, just like the capital counts are in the textbook, then the first thing you do is you get rid of the allocation of the potential loss of 100,000 and the liquidation expenses. Okay, so you take the 100,000 and the liquidation, and we've got 112,000. You split that over the three partners on the basis of 4-4-2, and you get those ending capital balances right here: 15,200, 4,800 negative, and 2,400. Unfortunately, Delphine has to cover these two deficits. So putting back in another 4,800 to Xavier to get it to zero, putting in another 2,400 to Oliver to get it to zero, it tells us there is a safe payment of 8. However, Delphine gets it all. Okay. Do anybody have questions on number 18 or how you see it look here? Um, you mean in Delphine's capital account, or and that can't happen because our assets have to equal the sum of our liabilities and our owner's equity. So in order, you know what I'm saying? So I know what you're getting at, but it's not by coincidence that it's 8 and it needs to balance. So we're looking at the entire balance sheet, and that's a quick and dirty answer to your question that it wouldn't be possible. I mean, we have to have this balance. Anybody else have questions on number 18? So, what's nice to know is first, what is that safe payment? Well, we know it's 8 just by looking at what we have here. But then the bigger question is who gets it, and then it's based on, potential maximum losses. Well, we said that there's 100,000 of other assets on the books, so we're going to take it all as a loss. And we're going to add another 12,000 because that's an expense that's not yet recorded. So if we add 112 to their capital accounts or take away from their capital accounts, then we can figure out who is going to get that safe payment. So, okay. Anybody else? Trevor, makes sense to you? All right. Then we'll move to number 19. This one, it reads, or Megan, could you read it so somebody can listen to another voice instead of mine? So what I had to do in my book, because it was hard to keep this straight, I put an asterisk next to SEDAC and Emerson. Those are the only two that are solvent. And everybody understands what insolvent means and solvent. If you don't, make sure you interrupt me so I can explain that better. But I put an asterisk next to those two because those are the only two that are solvent. And then you look at and you see who it has deficit capital accounts. Virtually, well, there's 3 of them, Beck, SEDAC, and Page. All right, assuming that all the partners are insolvent, how much cash must SEDAC now contribute to the partnership? Well, here we go. So since in this case, we know that we look at this, Beck and Page, if you look in your text, both of them not only are insolvent, but also have deficit balances. Okay, so those 2 alone, we know we've got some problems there. So Beck and Page are both personally insolvent and have negative capital balances. And another thing there, if I don't know if you noticed, Beck has a loan. Okay, so when you net that loan, that $8,000 loan and that $12,000 balance deficit, there is a $4,000 deficit now, right? A $4,000. So the summation of that 4,000 and Page's 6,000, we've got 10 grand. We've got 10 grand to divvy out. Okay, everybody with me? So those 2 are insolvent and negative. We'll start there first. So then we take the last 3 partners that are left, the C, S, and E. And what we do here is we take the $10,000 deficit that we got to split over these other 3 partners. And what's left is a partner of C of 40%, S has 10%, and Emerson E has 20%. So 4 plus 1 plus 2 is 7. So 40/7, 10/70, and 20/70 times the 10 grand, this is what we're going to have to give to them, the 5,700, the 1,400, and the 2,800. Well, right now, Cineros, whatever, has a $5,000 in the black. However, that's going to put him in the red of 714. SEDAC already has a negative balance, but we know that SEDAC is solvent. So now this one is a negative $9,400 and Emerson to the positive 10. All right, so now let's take it the next step, and it says Cineros is also, we know this, is insolvent and now also has a negative capital. That negative capital needs to be split over the last two partners that we know are solvent. Okay, so now we take that 714 and we split it. That partner, SEDAC has 10%, Emerson has 20%, so 10 30ths, 20 30ths times 714. So SEDAC now goes to a $9,600 deficit, and Emerson has an ending balance of $96.67. So the question again was, how much SEDAC now contribute to the partnership? Right here. That one needs to contribute $96.67, and by doing so, it's going to go all to Emerson. Everybody understand what we were doing there as far as the steps? So the first step, you'd want to look at those that are both negative capital and insolvent, and then move to what's left for just the insolvent, and then you should get to your last steps to figure out who needs to contribute cash because they're solvent. Okay. Questions on number 19. You got it. So personally, their liabilities already exceed their assets. So personally, they have nothing to contribute. They cannot contribute. They are already belly up, if you will. Yeah. Can you see, because of all of this, if you will, why the general partnerships don't exist anymore? I mean, certainly from a liability standpoint, but this certainly doesn't make friends either. Any questions on this one? All right. And I think I also said, let's look at number 21. All right, number 21. Alex and Bess have been in partnership for many years. Did I have this one in the exercises provided to you? Anybody know? No, I believe you. I want to just make sure. Oh, right here, Macy, do you see it? No problem. I just wanted to make sure I didn't forget, which I never forget anyway, never. Alex and Bess have been in partnership for many years. The partners, who share profits and losses on a 60-40 basis, wish to retire and have agreed to liquidate the business. Liquidation expenses are 5. At the date of the partnership ceases operations, the balance sheet is as follows. All right. Prepare the journal entries for the following transactions. First, A, distribute safe cash payments to the partners. All right. So somebody step me through this. What should we do? How should we do this? Macy, I'm going to pick on you, and you can look at the solution here, but better yet, if you remember what we did, not this last problem, but the problem before, how did we figure out how much? I'm not asking you who gets it, but just how much. Absolutely. 5,000 is what could be distributed. Good job. Now the question is who gets it, right? So if you look, and now you remember on that other problem, step 2 was look at all those non-cash assets. There's 150 there, and then we're going to add that $5,000 liquidation expense, so that's 155. So we're going to take right what we did here, that 155,000, and we're going to split that on the 60-40 basis. So they had 90, we're going to allocate them 93. Now that's a -3. Best had 70, it's going to get allocated 62, so that's 8. Well, if you look at there, that nets to 5, right? So Bess would have to cover Alex's deficit of 3. We could go through all those steps, but we're not going to because we know what we're doing there. Who's going to get it all? Bess. Bess gets the 5 grand. And do you see the journal entry there? We haven't done that yet, but the journal entry is just simply reduce his capital by 5 and we take out cash. Everybody good with that? All right. Letter B, they paid 30,000 of those liabilities, not all of it, but just 30. So simply debit liabilities, credit cash. Okay. Letter C, sold non-cash assets for 160. Hey, how about that? Sold them for 60. So we, of course, have to debit our cash for that. We get rid of it for this because that's what it was on the books for. This is very unusual. There was a gain, right? It's usually not the case, but it depends what it is. So instead of putting it to the gain account and then ultimately closing that and putting it to the capital accounts, let's just put it straight to their capital accounts and their ownership percentage. Everybody okay with that? All right. And you see this sentence here too. So that means we moved Alex and Bess now have 96 right here, 90 plus 6, and Bess 70 minus 5, right? Because that was right here, plus 4, which is 69. Make sure if you don't have this printed off, you may want to print this one off later, but make sure you put that detail, how do you get to 69? It was 70, we took away 5 here, and then we added 4 back, okay? Letter D, distribute safe payments to the partners. Okay, so here's our schedule of liquidation. We got 50,000 in cash, we had 150,000 of non-cash, 40,000 of liabilities, capital and capital. Then we just did this, right? The 5,000. Then in the entry letter B, we did this. Okay. And then we just got done in letter C selling those cash or selling those assets for 160 grand. So we added 160, we take away 150 here. And then we put the 2 gains on the capital accounts there. So here we are. Everything we've done A through C, this is where we're at. 175,000 in cash, and we still got some liabilities. Okay. And letter D, we're making a safe payment or a schedule of liquidation, I should say. So of course, the first thing, we got to get those liabilities paid. Okay. and we're going to record that 5,000 of liquidation expenses. Again, it's an I'm sorry. We only paid 4. Oh, that's letter F. That's letter F. You're ahead of us. That's right. So at this point in letter D, we know the letter D, it's an estimated number yet. So that's a good question. But at this point, I know it's hard to see. There's, of course, dates and times. So at this point, we only estimate it to be 5. So we're going to take away 5. And notice here how we are debiting their accounts, right? So what's the safe amount that we can distribute? Right there, 160 grand. And that's really safe because we've already sold all of our non-cash assets, right? So that's really what's left. Okay, so then knowing that, we can make this entry, debit their capital accounts, credit the cash. All right, letter E, it says we paid the remaining. So now we paid those liabilities and the cash gets debited. Credited. Letter F, it says now we paid those liquidation expenses and it's only 4 and it won't be anymore. So we credited cash. We hit their capital accounts for the 2 60-40 split. And then letter G, distributed remaining cash held by the business to the partners. Well, we at this point have gotten rid of everything, right? Except we estimated 5, so now there still should be 1,000 left in the account because we estimated 5 and we only had to pay 4. So now we'll give the last $1,000 back to the partners. Questions on Amanda? Okay, your screen popped up, so it must have it rotates through, so I thought maybe you had a question. How does everybody feel about that? Honestly, this right here is key. Letter D is a big deal, laying this out like that and then carrying it down. That really, really makes a difference. Do you guys all have your textbooks with you? One thing I would tell you is, and I have it on the review sheet too, but it's on page 719, way at the bottom. It's this comprehensive problem. And I didn't assign it, but that comprehensive problem and the solution, all of those various steps, if you're with me, all of those various steps are in the different problems that we've done. Okay, and certainly this one right here. And if you look on page 721, that's where we start doing those journal entries. And those journal entries really are not that spectacular. There's not really anything in there that's very, very mind-blowing. I think the only thing are very difficult. I think the parts that you have to remember is rather than debiting an expense account, you debit their capital accounts. Rather than crediting a gain account, you would credit their capital accounts because we're not doing an income statement anymore. We're done. And we're just flushing it all into their capital accounts. You could do an income statement, but then the thing is you got to remember to close out your income statement and put it once again back into their capital accounts. So we just skip that step. So my point is make sure you review that comprehensive problem as well. Okay. Any questions for me? Anybody? Okay. So let me, yes. Are you on number 21? Okay, so well, this one right here. Okay, so you are okay up to like right here. Okay. Then because in letter B, they paid 30, but if you look on page 727, there was a total of 40. So then the maximum that's left, it's probably not a really good word, but what's left is 10. So before we can make any safe payments, we got to get rid of this first. We got to pay this first. And then we also had estimated 5,000 of, I'm sure there had to be some fees paid to possibly their accountant to, shut this thing down and pay the bills and file the final tax return. So there's the estimated high. And we know that because here they actually only had 4,000 of expenses. And because of that was the only bills that they got then, and we waited some time, now we find out we're done. Nothing more is coming in. Well, we still have $1,000 sitting in our checking account because we estimated 5. We held back 5 and only 4 came in. This right here. Can you ask your question again? I'm not sure if I follow. Oh, this would be the final. I'm sorry. So the final is not much different. I mean, look at here, this line right there, that's the same that we had, right? And then we took care of paying them out some of what was left, right? Because then we paid the next 10, then we paid the 4, and then we paid the last $1,000. Honestly, letter B, you've really got right here. It's just now you have to show this, the 160 paid, and paying out also the 4,000 that was really left. That was the actual, and then you pay the last 1,000. Okay. Sure. Yep. Yep. And we can do that when we see the whole picture, right? Because we see the beginning date and the ending date. But in the reality of it is when we're going through this, I quite frankly don't think you have to make A and B any different. I think you would have, all of this down and because what we were doing here is just trying to get to a safe balance. However, when we go back to the reality of it, we start here again. So here's our 175,000. We did pay that out 160, and that's not shown in an A. That leaves us with 15. Then the next step is we actually did pay the last 10. We actually just paid 4, and then we actually had to finally pay the last 1,000. So A and B are should be very much the same. Letter A, the only thing is different is because this is going to take potentially, months and months and months. So you'll do this, you'll do that, you paid that, you got those assets sold, there you sit. Well, you're not going to just say, okay, let's pay all 175,000. What we did was we go back up to here and say, okay, that's what we have available. However, there is some additional liabilities that have to be paid yet. There's some expenses that we have to incur. So really, the only thing that we can do at that date, at that time and date, is pay this. And then we get that, because that's all this excess cash. So rather than just sitting it in the checking account for eternity, we're going to get rid of that first. Well, then things start to finally happen and we get things, well, we finally get this bill and we pay it. Well, then we actually only pay that. And then finally we pay that last 1,000. So A and B, or letter D, and then this part B should be, should be relatively the same. It's just that part D, or letter D, showed at a point in time where finally we can get rid of some of the excess cash. And part B shows from beginning to end in actuality. Anybody else? That's a great question, Macy. Okay, let's see if I can stop sharing my screen. I don't know, did I come back? Okay. So let's talk about this next week. So today I'm going to email you, and this is something that we haven't really covered much of because we're just not going to, and I haven't in my other DCP courses either. You'll get, it's a chapter 11 take home. So it's a printed form, okay? So I'm going to email that to you. You can use all your resources to do that, okay? And what it is on IFRS, you'll look through the text to kind of determine what's going on with IFRS. There was no assignments out of that. So you kind of go through that and you have all your resources to do that. That's not due until a week from today, okay? So there's a lot of time to do that. There should be 2 take-home exams for chapters 14 and 15 on Connect, and that is due next Monday, the 7th. Is that right? Is that the 7th? I believe so. I don't have my calendar in front of me here, so let me check. Oh, that is Tuesday. So I'm going to change that because we're no, that's right. It's Tuesday. Yeah, because we're a Tuesday, Thursday class. So that'll be due on Tuesday night, okay? So some of you will want to get it done before that. And then we'll actually take our in-class test, if you will, over chapters just 14 and 15, and that'll be on the 9th, okay? So that's Thursday, a week from today. And I believe I'm still working on that, to be honest with you. So I would not be completely honest if I told you I have it done or I can tell you where it's at. I think I'm going to have that also on Connect is where I think I'm going to put that, but you will take that also at home. Say it again. Correct. What we would call the in-class test. Yes. Yeah. I'm thinking that's where it's going to be, Megan, is on Connect. By the time we get back together, well, in fact, I'm not sure that it's necessary for us to get back together on Tuesday, right? Because we're done. However, I will do this. I will come in on Tuesday. I'll send you an invitation again for Tuesday. That way you can ask me questions if you got questions about the test. If you have questions about um, the study guide that I sent out to you, I sent that in the link last time, correct? You got that? I thought I did, but I can. Okay, good. If you don't have it, just check, but I can always send it again. Oh, really? Okay. Oh, you got to be kidding me. In your email? Oh, I suppose they're probably getting. I'm sure they're getting a ton of stuff. I hope they don't do that to me. I'll be screwed if they do that. So I will send you that. Yep. So the review sheet, 11, 4, well, yeah, it's 14 and 15. So I'll send you an invite for Tuesday, and that you don't need to attend, but if you do, we'll go over that review sheet if you have questions or whatever. But so that's what we'll do Tuesday, and that's about it. And then Thursday is the in-class portion. For 15, yes. Yeah, I got 14s out there now finally. I don't know that I've opened up the solution for that matter, but 14's out there. Yeah, unfortunately, I can't have it out there for 24 hours or something like that. So, but we'll make sure that we have enough time to get through it. So, good question. Anybody else? I think it's kind of probably be more of a combination of both. But like the multiple choice, it's certainly A, B, C, or D, and we all know that. But when, like in chapter 15, or let's say chapter 18 or chapter 14, when you're doing the bonus method or the goodwill method, right? And certainly you got to figure out, okay, well, how much does it get allocated to this partner or that partner? So even though it might be a multiple choice question, there's still quite a bit of computation in that, right? So these multiple choice questions are not oftentimes, unfortunately, super fast. So I'll make sure I factor time in for that. And so, but with some limitation, Macy, it can't be a 4-hour test. So I gotta factor all of that in. So that review sheet will kind of give you some guide too. But if we can cover something in a multiple choice question that handles the journal entry for the goodwill method when they come in, I probably will not have that also be a problem, right? I'm not going to hit it twice. There's too much material, and if you can do it in a multiple choice question, I feel like you got it understood there, and we don't have to do a multiple. Or if I do it in a problem, I'm not going to do it in a multiple choice question. So you'll be fine. I believe so, yes, but you don't need to worry, Brendan. I'm going to send it out again. This time I'll send it out. I guess it probably doesn't matter. It gets deleted out of your deleted box in 2 days anyway. So I'll send it again in the invite, but I'll make sure you get it. So anybody else? Okay, here's the extra credit. This is the hardest extra credit that you will ever have in your 4 years of college. If you show up on Tuesday with your favorite USF gear on, whether that's a hat or if it's your favorite sweatshirt or t-shirt, but some USF paraphernalia, you'll then you don't have to take the test. So no, Amanda. So if you, and honestly, for Tuesday, if you still don't have any questions, if you just show up and show me that you got your hat on, you can log out too. You don't have to stay the whole time. So cool. Anything else for you guys? Kind of a short day today. You guys hanging in there? How about with all your other classes? You hanging in there? Yeah, yeah. Um, I personally don't think it's, I'll talk just particularly for ACC 425. Okay, I'll talk in that spirit. I personally don't think um, it's necessary. That's my opinion. Um, I've had somebody ask me, what is the drawback or what's the benefit? Um, there's certain, there's no question, there are certain majors where they have to have a grade on their transcript. Nursing is one of them. Nursing is one of them. And there will be a lot of classes that they're going to have to, though it doesn't matter. And education's also, I think, some. I think if anything, what it's going to do for some is if an employer asks for your transcript, um, and I'm not thinking that that's very, very popular, quite honestly. I'm trying to remember, like when I applied to different jobs, if they asked for my transcript, they certainly, um, companies today now are a lot more thorough about getting their diploma to ensure that they actually graduated, because there are so many scammers out there that they said, I went to so and so school and I majored in this and I was, magna cum laude, only to find out they never graduated, they never attended that school, and um, so they may ask for your diploma to show that you've. But if they ask for your transcript, some schools or some might, they may ask the question, "What's going on here? Why was this pass no credit?" That's the one thing I can think of. The only other time I would think that you would want to um, pull that trigger is I'm literally between that D minus and F. So I'm at, you know, 59.9 or I'm at 60%, right there, right at that border. And I don't see a whole lot of promise to getting it up much more than that. Then if I can at least get it to that D minus, that you pass the course, then I can see where there would be some. But you guys are not going to be in that situation. You just took the hardest test of, in my opinion, of the entire course, the 1 through 5, no doubt. Um, I don't think it's that way going forward. So I don't know if I'm answering your question, Megan. How do you feel about it? What's your thoughts? Yeah, yeah, yeah. That's my only 2 cents. And I think I had this conversation with Macy earlier. Taking one online course is one thing. Taking five is another. And so I get that. I There's no question, and I don't know about you guys. You know, I've always told my degree completion students that I have those, and then those are all online. And I always tell them right out of the gate, this is a lot tougher than face to face, because the burden is on you to do the reading, to do the homework. Really, truly, the burden has been shifted. Um, so taking one is one thing, five is another, and None of you guys signed up for online. You didn't go into thinking it was going to be online. So then that got switched on you at nobody's fault. But so I think they're just trying to be as compassionate and understanding as physically possible that, hey, we want to make this be a good experience for you in a very, very tough situation. So it's nice that they have that offer. So, but I think, what do you have till April 30th to make that decision? Yeah, so you got some time, which is nice, you know. So, anybody else? All right. Hey, I appreciate you guys logging in. You guys all have a great day. All right. All right. See ya.